So welcome back to Dapp University. So we got a lot to cover today. I'm super excited to go over all this with you. We got the Ethereum price smashes past $1,700 per token or per coin. We have a new DeFi hack that I want to go over all the details of today. I'll talk about which protocol it was in a minute, what happened, all the juicy details, whether your funds are at risk, whether your investments are at risk, all that kind of stuff. And also about how the blockchain space is just heating up. This industry is growing like wildfire, and people are chomping at the bit to find talent to build new projects in this space. And that's exactly the main focus of what I show you how to do on this channel. We're going to talk about that all towards the end of this video. So if you're new around here, just join me for the first time. Hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step by step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So let's check in here on the stream on YouTube. Awesome. Very cool. So we got some people in the chat right now. We got Brad. Awesome. Very cool. Just want to make sure the stream is alive and well. It looks like we're good to start. So let's go over a lot of these juicy details. I want to talk about this hack that happened in DeFi, but first let's check on the market. Specifically look at Ethereum. So somebody says hacked. Yes, there was a hack yesterday. So we're going to talk about that, what happened, whether you need to worry. Most of you probably won't need to worry, but we're going to talk about, what's going on here. So first of all, let's start with Ethereum. So it smashed past $1,700. It just like blew through it. I was honestly a little bit surprised that this happened. Kind of talked about on yesterday's live stream that I was expecting it maybe to kind of cool off a little bit, but it looks like we're just kind of continuing to trend upward and enter into price discovery mode. I've been talking about the distinct possibility whenever you break a historical all-time high like this. Like some people think that the all-time high is bad, that it means it's usually at the top and we're going to crash down. But if it's a historical all-time high like this, a lot of times it means that, we're going to find new highs. And so that happened, but I was honestly a little bit surprised to see it break 1,700 so fast. Because if you look at Ethereum typically trades like this, it kind of goes up and down and up and down. And it did go down a little bit, but I would have maybe expected this to come back down into maybe like touch 1,500 or so. Like I said, I'm not a big TA guy. I don't know exactly what the Ethereum price is going to be a week from now, a month from now, all that kind of stuff. A lot of what I'm doing here is just checking on my own investments, tell you how I feel about it. Like I said, I'm a big Ethereum holder. That's one of my main, crypto. Actually, it is my main crypto investment. And I feel good about this. So that's kind of my personal update. I don't feel euphoric, which is good. Whenever I start feeling euphoric, I usually know that that's kind of some time to maybe start thinking, because you have to really think opposite of the market in order to, increase the likelihood that your judgment's actually sound, because you kind of have to think opposite of what other people are thinking. If everybody else is thinking that the market can only go up from here, just straight vertical wall, that's usually a bad sign. And I don't think we're quite there yet with ETH. I mean, I do see a big, jump like this that happened over the past couple months, but I don't think we're like, in the euphoria phase just yet. So awesome. So we got lots of people coming in here. It's like ETH's exploding. Yep. Yeah. Hack on DeFi. Cool. Yep. 2K soon. All the way to the moon. Right. So yeah. Awesome. So let's get into this hack, because I know this is something a lot of people are going to want to know about. So who was the victim of this hack? Well, it was Yearn Finance, or Yearn Finance, depending on how you want to pronounce it. So let's start off like what the app does. In case people are wondering, I just realized I haven't been sharing my screen again. Sorry, everybody. Still getting used to this format. Brand new to this. My apologies. I know it's kind of a boring video sitting here talking about the ETH price and not showing the ETH price on screen. I'll get better at this. It'll happen. But anyway, so the DeFi app that was exploited. Now, some people will take issue over the word hack, right? They talk about, no, it's an exploit, it's an attack, whatever you want to call it. The people who have their funds in Yearn Finance, some of them lost their funds, and they didn't want you to do that. And so that's kind of why I think it's a hack. But anyways, so Yearn Finance is a DeFi app. It's a blockchain application that basically finds the best yield for you. So if you think about like yield farming, we've talked about a lot in these videos. It's one of the big popular things in DeFi, where basically you deposit money into an app a smart contract on the blockchain into a DeFi app, and it gives you brand new tokens as interest. Okay. So basically, like, you can think about depositing money into a bank account where you're earning interest on the money denominated in the same money that you deposited. So if you deposit US dollars into a bank account, you're earning like 0.01% interest or something like that in dollars. But with yield farming, a lot of what times what happens is you'll earn that interest, but you'll also earn like brand new tokens. Like if you deposit USD, you might earn, Wi-Fi tokens or something like that. Then you won't earn Wi-Fi if you use that, but I'm just using that as an example. Like compound finance does yield farming. You deposit, all these different coins, and you can get, compound tokens as a reward for doing that, as an incentive for providing liquidity to the application. So that's what Yearn Finance does for everybody who doesn't know. Or Yearn Finance, depending on how you want to pronounce it. So what they do is they're automated. So basically, they find the best yield for you. So you just deposit your money, and they have these things called strategies on the back end that basically say, you can get the best yield right now here or here or here. Because a lot of what yield farmers, quote unquote, do is they're always chasing the best yield. They say, oh, I can get, 100% APY here. I can get, 1,500% APY here, because the APYs, they run out. Or like somebody else comes on the market and gives them, quote unquote, a better one, right? So they're always trying to maximize where they can go. But that's what Yearn Finance does. And yeah, they have, their Wi-Fi token, which is really famous because it for lots of reasons. It was a fair launch where basically like there was no like, a dev allocation or anything like that. Basically, people could just farm it. And it went up from like, like basically, I can't remember what the entry price was. The market set the price, but there's only like 30,000 in existence initially. They added some recently to help the dev team, but it was like it was a few dollars basically, and it just shot up to $40,000. So a lot of people got insanely rich off Wi-Fi over the summer. I got in kind of early on Wi-Fi. I wasn't there. I didn't mine it, but I think I got into Wi-Fi around like $2,000, maybe $1,000. I can't remember, to tell you the truth. But anyways, so what happened? So basically, there was a flash loan exploit that compromised funds on the application. We'll go over what happened here. The good news is this was found really quickly. All right. And it was mitigated quite a bit. So a lot more money could have been lost, but the team was really fast on fixing this. This is my understanding. So part of it, well, I'll say here, this is a disclaimer. I'm just finding out about this. I found out about it at the end of the day yesterday, but I haven't really been able to get into all the details really in depth. So I may get some things like subtly wrong. I'll try to be really clear about what I don't quite understand, because honestly, I would have to sit down and like look at the code and do an audit myself to get a full understanding. But let's just take a look at what people are saying here. So let's say, new DeFi exploit, victim, Yearn Finance, Yearn Finance, Yearn Finance, what you want to call it, attacker profit. So, people call it a hacker, attacker, et cetera, et cetera. The person who did this, so they basically made $513,000 in DAI, so it's a stable cryptocurrency, $1.7 million in USDT, also a stable cryptocurrency, and then also $506,000 in Curve. Yeah. So basically, they made 11 transactions. So to my understanding, what happened here was basically exploiting the application in a way that caused this to happen. And basically, they were able to take out flash loans for 116,000 ETH from DYDX, flash loan 99,000 ETH from Aave, borrowed 134 million USDC, added as collateral. So basically, they borrowed a bunch of money from these flash loan providers, combined it with all these other DeFi, strategies to create this massive amount of money that allowed them to do this exploit. That's the big picture of what I'm seeing here. There's a lot of, important details. And like I said, I'd have to get into the code. I'd actually have to pull the transactions up on Etherscan and analyze it to get a much deeper understanding of it. But basically, they were able to just get a lot of capital, sort of a battering ram to do this. And it looks like they're able to just manipulate their protocol in a way that probably tricked the app into thinking something that allowed them to get funds. Okay. So somebody says, like, what is the issue that was being exploited here? A manipulation of exchange rates. So let's see here. Somebody's coming to chime in on the chat here. Let's see here. So somebody says a translation attacker debalanced the exchange rate of stable coins in the 3-curve pool, then caused the wide dive vault to exploit at a bad exchange rate. So to me, on the surface, it looks like what people are talking about is basically manipulating the exchange rates on the application that allowed them to, get some of these funds. And so, this was a multi-million-dollar exploit, but it was mitigated quite a bit. I think people said that like the team's response time was like 10 minutes or something like that, and basically really, it could have been a lot worse. Okay, so hopefully nobody watching the stream, suffered as a result of this. But that's kind of an overview of what happened. And so, like, the Wi-Fi token itself was like, it took a little bit of a hit, but it doesn't look like it's, it didn't look like it nuked to zero or anything like that, right? So if you're a Wi-Fi holder, you might want to check on that. But it doesn't look like it was, too bad for the token itself. So let's talk about some things here, because there's a lot of things. There's a lot of questions around this, right? So a couple things is like, some people say, are flash loans bad? Are they like a net negative for DeFi? So if you don't know what a flash loan is, basically it's where you can borrow, millions of dollars in cryptocurrency with zero money down as long as you pay it back in the same transaction. So if I send, like, the blockchain supports complex transactions, and that's what you can do with smart contracts. So let's say I send you like 1 Ether. That's a transaction on the blockchain, but you can do complex transactions. So anytime you trade a token on Uniswap, that's also a transaction, but you can code smart contracts that do multiple things. Like, I could, send money to a smart contract, trade it on Uniswap, and then instantly turn around and send it to somebody else, all in the same transaction, do multiple steps. So that's what a lot of blockchain developers do when they create smart contracts, is they create code that creates these complex transactions that do multiple things all in one go. Okay. So with flash loans, you can borrow a bunch of money, right, for free, and you can do stuff with it. You can trade it, right, as long as you pay back the exact same amount in the same transaction. So you can do lots of different stuff with this. Like, I've taught flash loans. I can do them myself. You can do arbitrage. Okay. So let me pull up my screen here. My whiteboard just went away. So what can you do with flash loans? So you can do things like arbitrage, where basically you buy cryptocurrency on one exchange and you sell it on a different exchange for a profit, right? And part of it, that is helping bring prices to efficiency on different exchanges, so that can actually be a benefit for the ecosystem, and you get a profit for doing that. You can do liquidations, right? Any of these DeFi protocols that allow borrowing, and the person basically, goes beyond their limit for their collateral, you can process liquidations. There's lots of stuff you can do with flash loans, right? But one thing that we're seeing are some of these exploits, all right? So some people wonder, like, are these exploits bad? Like, do we have, are these exploits bad enough to where flash loans are a net negative, even though we have like some of these benefits like arbitrage, where basically, small players can come in the game and compete with, people because it gives them access to capital? Are they bad because of these exploits, and is this a net negative, right? So there's lots of debates on this, right? And some people say it's sort of like the gun debate, like, are guns bad? Like, they can be used for crime. right? They could also be used for self-defense. So like, there's sort of this thing on either side of that debate where people say, oh, we want to ban guns or ban certain types of guns, right? Because of how they're used, where people say, yeah, but if you do that, then you take away people's right to defend themselves, not just like in a individual basis, but also like, yeah. That's you. Most people watching this are going to understand that debate. People are drawing parallels between that and also flash loans. So, one thing to think about, a few things to think about. I always try to caution you on this channel that DeFi is risky, okay? So I do think that DeFi has a very, very, very strong chance at being the future of how we do a lot of things in finance, or at least the option of doing it the DeFi way is going to gain a lot of market share. I sincerely think that that's insanely likely, okay? Based on the rate of innovation, the minds that are in this space, all right? There's still problems to be solved. But that being said, we are still so early that there is risk involved, okay? And part of getting to that mature level is that you kind of have to test things out in production, okay? So there's two things to understand there. One is if you're going and doing DeFi yourself right now with a significant amount of money, you can lose money, all right? And I want to make sure everybody watching this video understands that, right? I've done DeFi, with a little bit of money to test it out. I've done it with larger amounts of money, but I always know what the risk is, right? I don't personally keep like large sums of money just sitting in DeFi for this reason, okay? So that's something to understand right now. That's not to say we can't get to a place where it's much safer, right? Especially as we have more sophisticated insurance around deposits and things like that, where that can even be decentralized. We already have that kind of stuff, but basically, whenever you can start having deposit insurance, really fast ways to mitigate some of these losses and recoup any losses that happen when you're a part of this kind of stuff. Okay, so that's my next step. But the other part is kind of testing this stuff out in production, and it has to be battle tested. Okay, so if you're in software development, you can write tests against software. You can have a security audit. You can do all that kind of stuff. But at the end of the day, you don't know what you don't know. And at some point, you have to push something out in the wild and see how it interacts in the real world. And the kind of counterintuitive, backward way of thinking about this is that the incentives for people to exploit a protocol can make DeFi as a whole stronger in the long run, okay? That being said, I don't advocate for anybody stealing money. I'm just saying that there are going to be basically people who try to exploit things. That's the nature. That's human nature. That's the state of the world. There's nothing I can do to control that. There's nothing you can do to control that. And because that's the way the world works and that those kind of people are never going away, then those incentives are going to be powerful for always showing us the blind spots with DeFi. And the more blind spots we uncover early when there's less users here, the more robust we can make the ecosystem. Now, that being said, you don't know what you don't know, all right? That's just the truth. You can have security audits, you can do all this kind of stuff, but you don't know what you don't know. And the more things we do know through these types of exploits, the more we can make a robust ecosystem. And pushing this stuff out there in production, letting people use the applications who hopefully full well know the risks that they're getting into, creates a powerful incentive for the people who are going to act, who are going to exploit things. They're going to exploit it when there's a big honeypot like this for an attacker or an exploiter. It's better to have those things in production with riskier, smaller pool of users than a large group of users who don't know what they're getting into. That's kind of my dismal look at things. That these things can just make us stronger in the long run. Because think about it. You could have ethical hackers, right, who could come in as security auditors. They could say, "Oh, I'm going to look at your code and try to find weaknesses in it." That person is nowhere near as powerfully motivated as somebody else who thinks they can make millions of dollars by exploiting your application. All right. I'm not saying it's right, but I'm just giving the nature of reality. The person who's motivated by multiple millions of dollars in an exploit is way more powerfully motivated to be successful in that endeavor as somebody who's just, paid to come in and see, kick the tires and see if your app's legit, right? It's just this the nature of reality, right? There's nothing I can do about that to change it. Nothing you can do about that to change it. But yeah, that's just DeFi right now. So that being said, I don't think DeFi is over by any stretch of the imagination. I don't think Yearn Finance is over by any stretch of the imagination. This is still super early. You need to know the risk that you're getting into if you decide to actually use DeFi as it is today. I still think that DeFi has a strong, bright future ahead of it to be a powerful alternative to what we have now, whether it completely replaces everything we have now or it is just a really awesome alternative. I think we're headed to one of those two scenarios. So let's see here. Unless you create reward kicking tires. Yeah, that's true. But like, let's say you pay a security auditor $100,000 to kick the tires. Okay. 100 grand. It's a lot of money. It's awesome. What about somebody who is as smart, maybe smarter, who's motivated by $20 million? Who do you think is going to do a better job? I mean, incentives are really powerful, really, really, really powerful. Okay. So let's see here. Elon rates Dogecoin. Did it have a little pump last week? Okay. So the next thing I want to talk about is how the blockchain industry is booming like crazy. So one thing to think about is a lot of these DeFi applications, a lot of these blockchain applications, and they do have companies behind them, right? Or they have teams behind them, I should say. That's probably what they like to be referred to. And a lot of them are getting, as they like to say, hilariously rich, right? The DeFi boom has been absolutely insane. I mean, a lot of these projects have 10x plus. A lot of their teams have held some of the tokens that are in circulation. So they're getting a lot of capital, okay? And a lot of them want to keep innovating. They want to keep shipping, okay? And this means that it's creating more and more and more demand for people to work on their projects, okay? It also means that there's a powerful incentive for new companies to get created to do the same types of things that these companies are doing. It's just an open invitation to start building on DeFi today. That you see you see companies out there creating these projects that are now worth billions and billions of dollars. Well, guess what? Lots of other people are going to take a swing at that. And guess what? They're all going to hire talent to help them realize their visions. So this is creating a huge boom in the blockchain space for blockchain developers, all that kind of stuff. Whether it's at one of these, blue chip DeFi startups, or whether it's, somebody who's maybe a little bit further down the ranks, who's just trying to break into the DeFi game and, create a company that, maybe not on the same footing as like Aave or Yearn, for example, but, does something else complementary in the DeFi ecosystem. So, somebody asked me on the stream yesterday, or they put a comment on there. They said hey, can you really learn blockchain as a beginner? Is it beginner friendly? They said, I think there's such a huge steep learning curve, all that kind of stuff. So I'll put it this way, there is a learning curve to it, but the learning curve you can get over the learning curve relatively quickly. All right. And on the grand scheme of things. All right. So most people, think about it, you don't need a computer science degree. You don't have to go back and get a long, expensive education. You can do it relatively fast and break into an industry where you can be productive in the workplace relatively quickly in the grand scheme of things. So I just got a message from somebody that I wanted to read here. So I asked their permission to read this on the live stream. So I blurred out their name here, but it says, "Hello, Gregory. I would like to thank you because I got a job in blockchain crypto business. You're one of my favorite blockchain influencer, and you show me the spark in this way. I watched your videos and learned lots from useful information. Doing a great job in blockchain community. Yeah, okay. So when he replied, I asked, if I could share on the live stream. They said, let's see here. They wanted to say something he wanted to relay a message to you all, which is tell them they don't have to focus only on the coin prices and how they're growing, but they can focus on the iceberg on blockchain development. Yeah, totally. So I think he's 100% spot on that. Because I think a lot of people who are in the crypto space, like, I got interested in blockchain, by watching cryptocurrency prices go up in 2017. But then that also got me really interested in the technology itself. And, whenever the 2017 bubble popped, I was glad that I was in the technology, okay? Because, blockchain is one of the highest paying fields in tech. There's a lot of demand for it. It's super early days. And yeah, that was a good decision at the end of a pretty big bubble to really help with the bear market of those sort of low years. Because I think this bubble is going to pop at some point, right? I don't think it's going to pop like tomorrow or anything, but it probably will. And most people, I don't think it's bad to like invest in cryptocurrency. I mean, I personally do it. But a lot of people are trying to solve their cash flow problem and also have like meaningful work that they like to do on a daily basis. Because I'm going to tell you, like, trust me, let's say you make enough money to retire off this bull run and you're still young, like you're probably going to still want to do something. I can almost guarantee that. Like you're going to get real bored if you just sit around and do nothing. So blockchain's fascinating. The coding aspect of it is fascinating. You can still, you can have it's one of the highest paying fields in tech, like I said, so you can have a very nice income that can really change your life in terms of the amount of money that you make. I mean, when I first started programming, I got up to that, sort of, I would call it life-changing income compared to where I was pretty fast, and it was amazing. And then I was actually working on stuff that was interesting, So that's before I got into blockchain, and I think blockchain is probably the most interesting field in tech right now. I mean, really, I think it is, I said that without hype because of the potential it has to change how we do things right now. Because think about it. If you're a software developer and you go work at some other company, let's say you're a web developer, a mobile developer, you're largely just kind of doing the same stuff over and over and over again. It's like you go work at one company, you're building a mobile app for, I don't know, like, whatever it is, right? Like it's some CRUD app, basically. I say CRUD, C-R-U-D. It stands for create, read, update, delete. For, I don't know, some agency, something like that. It's for a new fitness studio or something. It's about the same thing as if you're creating some sort of internal business app for a marketing company. It's the same kind of stuff over and over and over again. Whereas blockchain's, really interesting. You're solving new problems. You're coming up to the bleeding edge of technology. I think it's one of if not the coolest, one of the coolest fields in tech right now. So let's see any more questions. So somebody says, am I joining ETH Denver? So not this year. So somebody said, should I buy ETH now or wait for dip? I'm not going to give buying advice. Sorry. So CME Ethereum. So I've been talking about this in the live streams. People are asking me, like, if you don't know what CME they're talking about. So the CME is the Chicago Mercantile Exchange launching their futures product for Ethereum on February 8th, I believe. And that's, I think, Monday. So we're waiting to see what happens. CME Futures launched for Bitcoin back in 2017, around the time the Bitcoin bubble popped. We don't know if that had anything to do with it or not, if it's total coincidence. Some people are a little worried about that with ETH. They think, oh, if they see the futures product launch, maybe that, is the top for ETH because they'll just, bet in the price going in the different direction or, in the opposite direction. But I don't know. We'll see. Some people think that ETH is waiting to make a big breakout until, we're out of the woods from the CME launch. I think CME long-term is bullish for ETH because it means more people are getting exposure to the underlying asset. So if you don't know what future is, it's a derivative product, which basically lets you bet on the future price of the asset itself. And it's a derivative, so basically it means you're getting exposure to the underlying asset by way of a contract, essentially, or something that represents the asset itself, not actually owning Ether. And this, is in the traditional financial system, TradFi or whatever you want to call it. Yeah. So it's bullish long term for me because it means more people are getting exposure to ETH as an asset. Thoughts on when I think the ETH BTC bubble will pop? I don't have a public opinion on that. So somebody says, can I cover the most usual tech stack for the most common Dapp DeFi implementation? So yeah, there's a couple different strategies. I mean, if you're going to build a Dapp right now, I would definitely recommend doing it on Ethereum. So that would mean probably Solidity. I mean, you could do Viper, but I would recommend Solidity. That'd be the smart contract programming language. You could do it in Truffle. Okay, that's the framework for developing smart contracts that I use a lot on this channel. You could try Hardhat if you want to. I just did some videos on Hardhat inside the Blockchain Mastery membership program. So we've been experimenting with that, and a lot of people like Hardhat as well. I think Truffle's great still. You could, if you want to, you can write tests for the smart contracts inside either of those frameworks. You can deploy them to a blockchain. You can run an Ethereum node with Infura or like Alchemy. There's an Ethereum node as a service provider, so you don't have to run your own node. You can create a client-side application for the app with any modern JavaScript framework like React.js, Vue. You need to connect that application to the blockchain itself with Web3.js, Ethers.js, something like that. I've done lots of tutorials on Web3 on my YouTube channel. You can use Ethers. We've done some videos on that in the Blockchain Mastery program. Yeah, that's pretty much it. You need MetaMask typically, so you can optimize the app for MetaMask in your browser and then port it over to mobile applications as well. All right, everybody. So that's all I've got for today. I see lots of other questions here. Maybe jump on the live streams tomorrow. I'll try to answer some more questions then. Or not tomorrow. I'm doing these Monday through Friday, so just during the weekdays. So I'll see you guys back here again on Monday. I'll try to get some of these more questions. I know people want my opinion on, like, what do I think about Polkadot, Cardano, all that kind of stuff. Kyber, all that, right? So I will... Maybe we'll dig into some of those topics on some of the future streams. So as always, hope you like this video. Smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. It really helps these videos out so more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get started today, you can go to my YouTube homepage. You can find any of my free courses there, like Udemy courses, but they're totally free. You like those? You want to take the next step? Or hey, maybe you want to take a master shortcut entirely, head on over to dappuniversity.com/bootcamp to get started today. Show you how to build your first blockchain application from scratch. I've helped people with zero programming experience become real-world blockchain developers in a matter of months. So that's all I've got for today. Until next time, thanks for watching Dapp University.